Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat and London UK feed wheat. Paris milling wheat. In late May, prices moved down and away from arguably the most difficult overhead congestion on my daily chart, and that's between 267 to 270, where the market was capped and turned into a V-top. Prices, that's it, one there, V-top. Prices headed lower within a June-based, quite acute bear channel, exiting out at the long moving average, currently at 226. Nearby influence from the significant supports at 227, the now dipping medium moving average, currently at 230, the bright red neckline extension of the June-November 23 head and shoulders top, currently at 237, and under the overhead congestion between 238 to 242, containing the March 2013 high at 240. The market had in July, August and going into September hesitated, dipping, then pulling back up, forming a late June to early September bear channel, verging on being a descending, expanding wedge pattern. For this reason, I said here 13 weeks ago, and I quote, V-tops, such as the one here, sometimes form a handle or sideways action. End of quote. Now, the pressure on any V-top with an extension would be for lower prices, and so we saw an attempt lower in late August, eventually making a separate small V-bottom over late August, which was, interestingly, cut off as an island bottom with two changeover gaps, highlighted in dark on my daily chart, one in early August and one in early September. The gapping move higher in early September overcame the 50% absolute Fibonacci line at 219, the upper trend line of the descending wedge pattern, as well as the short medium moving average, currently 227, and the long moving average. The 50% absolute Fibonacci and these other moving averages are all now supports. We then had a fairly free area overhead until two principal resistances, the medium moving average and the bright red neckline extension. These stood in the way of a number of potential pattern targets. They were at 238, the primary target for the descending wedge pattern, at 237, the primary target for the island bottom, and 241, the combined secondary target for the descending wedge pattern and the island bottom. They are mostly within a 238 to 242 congestion band containing the March 2013 high at 240. 2 weeks ago, the market tackled these topside targets and achieved all of them, but at a cost. Prices had spent their energy getting up here, or up there I should say, and had little to sustain a move up and over the multiple topside targets, pulling sideways to lower since. The action nevertheless created a late August to date rising expanding wedge pattern, currently 243 to 278, highlighted in dark blue on my daily chart obviously. I said 2 weeks ago, and I quote, I am not overly enamoured of this pattern, but it still does exist, and for now I'd suggest utilising it until something else, probably better as well, turns up. Further up, we have a fairly free area, up to another congestion band between 252 to 255, possibly extending down to 250, and that's the end of the quote. Well, this week prices have exited the rising expanding wedge pattern, though not so far as to not be influenced by it still. Nevertheless, this has set up opportunities below for this pattern of a primary target X in the 217 zone with a secondary hardest to reach target X1 down in the 208 zone and a possibly tertiary potential, though not named, target down in the 213 zone. Oddly enough, above target X1. Finally, I also note that today we are set up for a possible daily key reversal down. Minneapolis wheat. Back in late February 2023, and especially at the start of April last year, so it's now outside the parameters of my daily chart, the market constructed a large bear channel that morphed into what is now my daily chart, an ascending and expanding wedge pattern, currently 660 to down well off the bottom of my daily chart. The upper trend line highlighted in bright red on my daily chart has been tested by the market over the last 3 weeks and has been escorted and reinforced for quite some time, though not very well, I have to say, by the declining gold long moving average. It's currently at 659. I've kept this breached large original descending wedge pattern still on my daily chart, as the others that were here originating from August, September and October 2023 through to April 2024 have all been thoroughly broken. And this, the largest one, is still here, even it has been previously breached. It is a just-in-case situation. And going back to the market action, prices turned low with a V-top at the end of May, heading down to in a very narrow and acute bear channel. The market exited out this pattern at the start of April, held up by a combination of the October 2018 high at 611 and the April 2021 low at 606. And most importantly, on approach to the purple highlighted September 2019 to date uptrend, currently at 596, which held things up despite what turned out to be a breach in the middle to late August. During the course of this time being held up, the market created what initially looked like, and still does, a more or less dark blue sideways expanding wedge pattern, currently 565 to 687. However, in this expanding wedge pattern, the market also created a bearish cat's ears pattern over July, triggered 8 weeks ago, but failed to reach down to its target below, instead turning back up from the dark blue expanding wedge pattern and over the breached uptrend, and importantly back up over the neckline for the cat's ears pattern. 6 weeks ago I said of this move back up, and I quote, "It's not been enough, not yet at least, for me to consider this to be a fresh move higher. Overhead, we now have the congestion from January to May 2021 between 625 to 650. Congestion at 635, a congestion band between 650 to 656 containing a medium moving average, that's currently at 633. Congestion between 666 to 676, containing the dark blue upper trend line of the expanding wedge pattern. The May to August 50% Fibonacci line at 669 and a long moving average. All these are also within a wide congestion band pre the mid-year V-top, formed between February to April between roughly 635 up to the May 2021 low at 676. End of quote. I further added, these last 2 weeks, so that's now between 7 and 5 weeks ago, these last 2 weeks have seen a significant recovery, but I have my doubts about the stability and the sustainability of this rise right now. I'm not writing it off, but I think I will need a lot more convincing for me to see this as a significant move higher. I'll be watching this market closely." End of quote. Well, the market did what it needed to do and prices rose higher, seemingly against my doubts, in the process forming the beginnings of a smaller ascending expanding wedge pattern, currently 648 to 737, unhighlighted on my daily chart because, as I said 2 weeks ago, and I quote, "I am not sure of it." End of quote. We even had 2 weeks ago a weekly key reversal up. This looked like a key development for the market, however it was not so, and we have seen this week prices push down below the lower trend line of this nascent expanding wedge pattern, ascending expanding wedge pattern, with the additional possibility of today becoming a daily key reversal down. Thus, whilst I am not as yet ready to set out targets below for this apparent break lower, I am ready to discuss potentials below for such a pattern. Hence a primary potential will be down in the 592 zone, whilst a secondary harder to reach potential down in the 571 zone, with a possible tertiary potential down in the 604 zone. We have the odd but perhaps not unusual situation of the tertiary potential being the nearest to the current market. London UK feed week. I am still sorry that this daily chart looks so colourful, messy and condensed. In mitigation, there's a lot going on here in recent times in a relatively narrow range. Excuse me. The bullish incentive seen here in the spring was eroded through May, enough that we saw the creation of a V-top with a very sharp downward slope that became, and here's the leap of faith I on early occasions asked you to make, and do so again this week. It is a V-top becoming a V-top with a ghost extension that was caused with the changeover in early July. The construction of the second part of the V-top was the very late May to late June, very acute and narrow bear channel. This bear channel overcame all the congestions on the way down except the one at 164.95, just above the combined lows of July 2021 and May 23 at 164. This congestion caused the market to exit out the small bear channel. We then had a changeover gap, a large one, between 170.40 to 196.45, and created a narrow and long descending wedge pattern. In mid-August, prices dropped away below this pattern, but chose to not really move away from it, moving back within and without it during September. I'll deal with this shortly, but first I'd like to talk about the big, and it is a big leap of faith. So imagine this descending wedge pattern tacked onto the end of the small bear channel, and thus we would have, as we've seen elsewhere in the other grain markets, a V-top with an extension. Only here, in truth, it is not. Anyway, from that break lower in mid-August, the potential was for lower prices, possibly as far as the June low at 164.95, and prices tried, but had limited success. The primary target was achieved, but not the hardest to reach secondary target, though we did see for a brief moment the market under the bright red middle time, currently 173.30, the recent late May to early July bearish shift pitchfork. However, prices recovered higher. Now, 5 weeks ago I stated, and I quote, "Though we have bounced, it looks right now like a bounce that may not be sustained. Hence, watch those supports again, closely, in case we see them tested. As below these, especially below the bright red middle time, we have the dark blue lower time, currently at 177.5, of the significant early March to late June bullish Andrews pitchfork. This dark blue pitchfork is the only bullish pattern, bar I suppose the gold long moving average, which is flatlining anyway, left on this daily chart, unless the market chooses to construct a new pattern." End of quote. Thus we now have below some immediate support from the September 2021 low of 181.70, which has been tested today but has so far held, then the 50% absolute Fibonacci line at 180.5, the combination of March to May 50% Fibonacci line at 178.25, and a flatlining long moving average. 2 weeks ago, prices pushed higher again, up and out of what was left of the descending wedge pattern, managing to gap up over the dark blue highlighted medium moving average, currently at 184.30, and the short medium moving average, currently at 185.20. Now, this sudden volatility is explainable in my commentary from 3 weeks ago when I said, and I quote, "Now, as I've said elsewhere, watch out for volatility around the pitchfork time crossovers. Usually I apply this to time crossovers of the Andrews and shift pitchforks for the same move, which is an important point. However, I am not being so strict here, so I just say caution on this, as the next crossover of sorts is on today, the 27th of September. It hasn't been today, but watch out for the next few days." End of quote. This was the reason for the sudden spurt higher. However, there is also always a however. However, I added the following 2 weeks ago, and I quote, "I'm not enamored with the price action over the last 3 days, as it may possibly be forming a 3-day bearish evening star pattern, and thus possibly filling in the gap left over from earlier this week. We'll only know this for sure early next week. So caution, watch out just in case." End of quote. Well, prices did not immediately flow lower the following week. Instead, it took until the start of this week, when the market gapped lower, and we have ended up today back below the dark blue medium moving average, with, interestingly, the target for the island top reached today on the downside. We are closer once again to the supports below that have held up prices since late August to date. However, a keen and interesting point is that we are also closer now to the dark blue lower time than we have been since late August. And next week, this lower time will rise up to meet the gold long moving average. And whilst this may be a good supportive factor, it also puts the lower time and the gold long moving average together, the last bullish patterns features I have on this daily chart, at immense risk of being broken. I'll continue to watch this market quite carefully.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Topic and ADM Investor Services International Limited. And here comes the final important bit.